Forward to shoveling later this morning or this afternoon. I'm Dominic Rovano. I'm here with Chris Zingalli. We're both from Janover, a CPA firm here in New York, and we're going to talk with you this morning about monitoring KPIs for your professional services organization. We are excited to talk about this. It's something that we've been highlighting internally a lot. How to effectively communicate deliverables and key performance indicators within your organization, how to monitor the performance, and how to consume this information on a real-time basis. It's not something that's easily done, but it's not impossible. I'm a partner within Janover. I work in the professional services group here. We provide advisory, consulting, accounting, and tax services to our clients. Chris Zingalli is the leader of our digital advisory solutions group. In addition to providing advisory and consulting, one of the key services that our digital advisory services group provides is dashboarding and analyzing metrics for our clients. So just a high-level overview of what we're going to be talking about today. First, we're going to be talking about quantifying costs for your organization. We're going to talk about the differences of the types of costs that are important to professional service organizations versus those of a more traditional inventory manufacturing type industry. We're going to talk about tracking time, the importance of tracking time for your people. We'll talk about challenges that we have for gathering all this information. We'll review budgets, KPI dashboards, and metrics. We're going to be monitoring the chat as we go along. If you have any questions, please pop them in the chat, and we will make sure that we address them in a timely fashion. All right, so let's get started. We have a polling question. Polling question number 1. What is the biggest pain point for your organization? We've got 6 different options. If you're choosing option number 6, please chat in your answer, and we'll get a few people, we'll give people time to answer this. I see some answers coming in.
Yep. All right. Let's give another 5 seconds or so.
Yep.
All right, that's almost everyone, Dominic.
Yeah, all right, let's show the results. All right, so it looks like 33% of our attendees are interested in how to better track budget to actual. Yep. All right, first question, PowerPoint deck. We will be sharing the PowerPoint deck at the end of the webinar. So happy to take notes. We're going to be sharing it with you. So keep an eye out for an email from our marketing team with the PowerPoint after this webinar. All right, so tracking budget to actual, as expected, timing and availability of reports is also a concern, as well as tracking time. So hopefully we get some good thoughts to you on these topics that are important.
All pretty common.
Very common. All right, so quantifying your costs. So as a professional service organization, people are your asset. And I know it sounds kind of corny. They're your most valuable asset. They're your inventory. You sell people, you sell time, but these are very true. You have to quantify your labor costs and the output that is going into the product that you're providing to your clients and customers. You know, every industry has certain identifiable costs that are directly tied to the products or the services they provide. On top of labor, some traditional costs that you might see that are what we call direct costs, those that are directly tied to deriving revenue, are processing charges, depending on your industry. What type of product are you providing? Are you providing a report? Are you providing a study? Are you providing consulting services? Depending on the type of deliverable, whether it's an electronic version or a hard copy version. There could be processing charges. Subscriptions, you're most likely subscribing to resources, whether they're technology or authoritative to deliver your product. These would be also considered direct charges. And finally, technology. We can't do anything today without technology. We wouldn't be here today without technology. You're utilizing technology to interface with your clients. You're utilizing technology to deliver the product. You're utilizing technology to move the product along internally within the team. Technology, as long as it's client facing and utilized in developing your product, is a direct cost. Labor costs. Now, we all know salary, benefits, taxes. These all are quantifiable labor costs for your professional services organization. Now, when you talk about drilling down to a product or a deliverable or a client detail for the services you're providing, how much labor are you expending on these different segments or deliverables? How much time goes into servicing a client? How much time goes into delivering a project? The best way to quantify this and track this internally is to calculate a rate per hour for employees. And this wouldn't necessarily be just a straight rate. You know, I pay someone $50 an hour, so that's how much I'm going to charge. You have to quantify a markup of those services just like you would any other product that you're selling for a profit. Now, these rates can vary widely based upon the industry. They can be a multiple of gross salary, could be a multiple of the net employee cost. A very basic concept is a third, a third, a third. If you pay someone $100, you mark that up 3 times. 100 goes to pay the employee, 100 goes to overhead, and 100 goes down to the bottom line. So the first step in all of this, benchmarking, budgeting, looking at profitability at a client level, project level, deliverable level, is to quantify your labor costs. Chris, do you have anything to input here?
I think you covered it pretty well.
Okay. So we've got labor costs. How do we quantify that labor cost? We know what we pay our people. We know how much our insurance is. We know how much payroll taxes are. But how do we figure out how much time are they spending on a project? This is a big pain point for a lot of professional service organizations, depending on the industry. We all know that lawyers, law firms are usually very good at quantifying their time. Accounting firms traditionally have metriced their deliverables this way. We quantify our time on an hourly basis by project and client. Other organizations, we find marketing, PR, consulting may not do as good of a job at metricing the time and monitoring it for the deliverables that they have for their clients. So this is a key aspect to starting to track your profitability and monitoring your KPIs. There are many time tracking tools out there. A lot of them are very, very economical. The entry level from a dollar perspective is not great. They are very scalable. They plug into a lot of different accounting softwares. Some of the most common that we see are Harvest, 10,000 Feet, Smartsheet, Toggle, EverHour, and T-Sheets. You can Google, you can search. There's probably hundreds of them out there. Each industry, we know the law firm industry has their specific pillar time tracking tools, such as the accounting profession has. But if you're looking for a very entry level, you want to get started small, maybe you want to start at big picture, start tracking time at the client level and not drilling down the project, you should look into one of these products that are widely available.
And Dominic, just to jump in there, all of these that you see on the screen, these are more so app-based. So T-Sheets is a Intuit software that's the developers of QuickBooks.
Right.
10K Feet is a Smartsheet, so a Smartsheet tool. So all of these, like Dominic said, they are entry level, the more app-based, but they are really good at what they do, and they are definitely a good place to start. Like Dominic said, once you want to take that next step up, then you get into the more complex time tracking softwares that are industry specific, but all of these are a really good place to start. Something to think about. I know personally T-Sheets has a really low barrier to entry. We've set it up for our clients, and we've used it, we've kind of tested it with our clients as well.
Right. The biggest obstacle you're going to have when implementing this is it becomes a necessary evil. Tracking time. No one likes to do it. We don't like to do it. Your employees aren't going to like to do it. But it's the only way to get there is to figure out how much time are people spending to deliver your product. And a lot of times it requires a cultural change. Tone at the top. You have to empower your people to see the benefit. You can build bonus structure off of profitability, incentivize them to track their time. The only way we're going to be able to metric and monitor these KPIs is if we have an effective measure of the time that goes into these projects. So right when you start doing this, the key factor is this has got to be incorporated into your financial reporting. You've got to be able to quantify this. All of these tools that we are talking about plug in to the basic accounting packages and even the more sophisticated accounting packages that you may be using. You're plugging these in to now monitor the revenue that you can derive.
And Dominic, one other thing there, we've seen a lot of this where in the past, businesses have been so successful kind of just doing what they do. They may not be tracking time. They've always been profitable. It doesn't really matter, right, how profitable specific things are. They just see that their bank account is increasing, and they're good with that. Right now, post-COVID or during COVID, this kind of stuff is a heck of a lot more important now. This is something that you should really start to monitor, especially because we're going to get into it on the next slide. Budgeting and projections are so important, as pretty much everyone on this call probably knows at this point in a COVID world.
Right. Margins are important. Profits are important. You want to pay your people, you want to maintain salary levels, but you also need to maintain profitability for the organization. So really monitoring the time and the output going into your clients is very important. All right, budgeting. The next step to getting to a more effective monitoring of your KPIs is budgeting. It seems like a very simple and straightforward process, but a lot of organizations fail to do budgeting. And the first step, if you're one of those organizations that never had a good budgeting process in place, the first step is to look back. What have we spent money on in the past? What has been our overhead? What have been our salary levels? If we're at $5 million of revenue, what type of salaries have we had to spend to derive that revenue? That's a good place to start. We highly recommend a rolling 12-month budget. Keep that up. Don't budget in December of 2020 and then not look at it again until December of 2021. In January, you're going to budget out a year from now. In February, you're going to budget out a year from now. You're breaking it down into smaller pieces. You're having a rolling 12-month budget that you're updating constantly. And that requires reviewing it regularly. You have to review it. You have to make sure it's realistic. If you have an unrealistic budget, you're not going to be able to monitor your KPIs. You're not going to be able to make the informed business decisions that you need in order to be profitable. Once you've established your budget, step number one, look back. What have we spent? Let's estimate what we have going forward. Build that into your accounting software. All the major accounting softwares out there, even if it's at a high level, have a budget to actual function. You should be plugging those budgets into your software and monitoring them budget to actual. Start at the organization level. If this is a first step for you, don't drill down deep into project or client level. Start at the organization level. What are we going to spend and what are we budgeting for us as an organization? You can always drill down later. Ideally, we want to get down to the service line, product line, revenue stream level, and then maybe even down to the client and smaller below the client, the actual deliverables within the client level. That's the goal. And the goal is to make this a seamless process. It's going to be a lot of work up front, But once you've got the right things implemented and the right procedures and steps, it's going to become more of a seamless process. It's going to be built into your organization, and it's going to be something that a tool that's going to be invaluable to you to monitor your performance going forward.
And Dominic, just for everyone out there, this is something that takes time to get right, especially if you're just starting to do budgeting, and especially rolling 12-month budgets. It's not something that's going to be perfect, right? So you kind of have to do almost like a process of elimination, see what works, see what doesn't work. For QuickBooks users out there, QuickBooks Online, and I believe QuickBooks Desktop, but definitely QuickBooks Online does have budgeting features built into it. I think it's a setting you have to turn on in your settings. It's not the best budgeting software, but it is good for that high level organizational view. You could plug in your budgets over 12 months, and then you could automatically run budget versus actuals in there. The whole budgeting and projections, like especially a rolling 12-month, it is really challenging. There are not many softwares. There are some softwares out there, but there's not many that do it perfect. So it is going to take some time from the organization, for management to figure out what works and what doesn't work. And there are some other tools out there that we've incorporated for clients. The cash flow tool, which is pretty much an automatic 3-month. It's a 90-day cash flow projection tool, which makes your budgeting a little flexible. But again, that's more short term. We are talking a 12-month, usually a 1-year period here. So Dominic, we have a good question here in the chat.
Yeah.
I think this is a good one.
Yeah.
Do you have any specific recommendations for what to say to folks who are constantly tardy with their timesheet entry?
Yeah, well, again, it gets down to empowering them, getting them to understand that they're part of a organization that is deriving profit, that we want to be profitable. If the organization is profitable, we can pay our people more. It's not easy. It's going to be an organizational change. Some of the behavioral tools that we incorporate or see other businesses incorporate are those, for example, if you don't enter your time on a regular basis and you have X number of warnings, say you have the first is a warning via email, the second is a phone call or a Teams call or a Zoom call, and the third, and this is harder in a COVID world, but when we're back in our office environment, we may cut off their direct deposit and say, hey, you have to come pick up your check from the boss in order to get paid, because it's that important. If we're not entering our time, we're possibly losing out on revenue. We're losing out on identifying issues with deliverables and clients. We cannot run our business without having this time entered timely.
Yeah, and on that note, kind of similar to what Dominic said, but I was at an organization previously that timesheets were, there was a deadline. That deadline was, I think, 11 p.m. on a Friday. And it was a large organization, so there's a lot of structure behind it. But if you missed your timesheet, if you were late more than 3 times throughout the year, your performance-based bonus was docked a certain percentage. And that was automatic. You couldn't reverse that. It was basically, if you miss it 3 times, it's over. Like, it's done for you. That's pretty extreme. But they were very keen on getting timesheets in early. The entire organization of many thousands of people had their timesheets in by 10 o'clock on Friday. And the first time, if you missed it, the partner in charge of your group would have a conversation with you. So that's an extreme perspective, but I know for us personally, it kind of put the fear of God in us.
Sure.
There was no way we were missing our timesheets by 10 o'clock on Friday.
And it's not going to be perfect. It is an organizational change. You're still going to have issues, but again, it's just all communicating, making sure everyone understands the extreme importance of it. And it's not going to be perfect, but organizations can get there.
Mm-hmm.
All right, polling question number 2. Are you happy with the way your organization currently generates, runs, and or utilizes reports?
We just launched that, so it should
we'll
pop
give
up
you
on the screen now.
30 seconds or so.
All right, wow, they're coming in quick.
Yep.
Let's see, let's give it another couple of seconds. About 70% of the people. Well, there are two clear answers here, two clear winners. Let's see, another couple seconds. All right. And for the audience out there, the polls here are not for CPE or anything like that. It's just to kind of make this a little more interactive, just so we could, you know, tailor our presentation and talk about things that are more beneficial to the audience. So let's close the poll. Want to talk through it, Dominic?
Yeah. All right. So 43% said no, could be better. Not surprising. All organizations have room for improvement. We've got 32% said yes, but like more detail with timely reporting. Timeliness is important. We're going to talk about what a traditional reporting cycle looks like and highlight why it doesn't necessarily lean towards timely reporting. No, it's rough. 14% said it's rough, and we're hoping that you can take some things out of this webinar today to improve the reporting within your organization. And for the 4% that said yes, everything is perfect, you must be one of the clients that we've worked with on implementing the reporting structure.
Yeah, that's pretty impressive. It's perfect.
Yeah. Okay. All right. So let's move on.
Yep.
All right. So talk about timeliness. Running your business under a traditional reporting structure, and the cycle of that sometimes feels like trying to drive your car while looking in the rearview mirror. Past results are very important. We celebrate past results. We make money on past results, but we can't run our business and plan for the future by looking in the past. So a typical reporting structure, maybe this is going to hit home for you. You come to the end of a cycle. Maybe let's put that in the perspective of a month. It's the end of the month. In a couple of weeks, it's going to be the end of December, and even more importantly, the end of the year. What happens? Your internal accounting team may start running reports. They're going to start to reconcile, make sure all the revenue has been recorded, all the cash has been reconciled, you've recorded all of your expenses. They're exporting certain reports to Excel. They're manipulating those. They're collaborating on them. They're sharing the information with different departments within your organization. Different departments are providing different types of input. They're creating a report that ultimately is going to be shared with management. And at this point, once management gets this report, probably days or weeks have passed. This doesn't happen overnight with a lot of organizations. At that point, you're halfway through the next period that you're going to be starting the process for. Management's got to analyze the results. They're going to have questions. There's follow through, follow up. And then by the time we get through studying and reporting and looking at what happened for the end of a month, guess what? It's the beginning of the next month, and we're starting that process all over again. Doesn't leave a lot of time usually to spot issues timely. We can pivot when we're looking backwards. We can change problems with client service, with deliverables, if we're looking backwards. So the goal is to get to a more real-time, tighten the circle up, shorten the time period, changing the way that you're looking at reporting within your organization to make it more real-time.
Yeah, and on this note, the piece to drive home here, Dominic, you know, accurate reporting takes time. What we see a lot, you know, reports should be pretty much three things, right? Timely, accurate, and meaningful. Meaningful to management or to the organization. It's really tough to get all three of those. If you could get all three of those, that's a home run. And it's shown on here, but when you do reporting in the traditional sense, and this kind of high level process we're showing on this slide here, a big piece to note is that there is a lot of potential for human error.
Right.
Some of these reports that we've seen, Excel spreadsheets that are 15, 20 tabs deep, when things are being manually entered and hard coded and formulas and stuff like that, there's always the potential for human error. There's no way anyone could be 100% accurate, which makes sense, right? No one's 100% on everything they do, but a lot of times these will, they will be open to human error, which is a challenge. Who knows how big or small that error could be or how meaningful it could be. The other piece, and you kind of harped on it, this process really gives you stale data. That quote that you had mentioned, the like trying to drive a car but looking in the rear view, that's true, right? When you get these reports, generally speaking, that data is stale. So how does that help your organization make a real-time business decision on the fly to change the way they're operating? You really can't, right? If you're getting these reports 2 weeks, 3 weeks after month end or quarter end or year, whatever it is, year end, and chances are you're probably not doing weekly or daily reporting. That's really a challenge in terms of timeliness, but it's really hard to make a decision that's going to affect your business in a positive way when you're looking at stale data. And then a couple of things to think about here. How are you consuming data as an organization? How often are you consuming it? How are you consuming it, right? Are you looking at KPIs and metrics like Dominic has been mentioning? Does your organization just look at net income, just your bottom line? Do you just look at your bank account? Are you doing these reports monthly, weekly, daily, annually? And based off the respondents, we see a lot of the reporting could be a lot better or more timely. So that makes sense. It's appropriate for what we're talking about here.
Yep. Yep. And that's a good segue into the KPI metrics.
Yeah. So Dominic has been throwing out a lot of these words, KPIs, metrics, and KPI meaning key performance indicator. Step one is understanding KPIs versus metrics, and there are distinct differences. When I was trying to put together the slide here, and we were trying to put together the deck, I was trying to look for a really simplified way to understand this and give everyone something to walk away with here. So I found this quote at the top of the screen here. All squares are rectangles, but not all rectangles are squares. Likewise, all KPIs are metrics, but not all metrics are KPIs. Right? So when you think about that, all rectangles are squares. What is a square? There's four right angles, and there's four sides, four right angles, right? What's a rectangle? It's four sides, four right angles, but two sides, the parallel sides are the same size. So all squares are rectangles, yes, because a rectangle has, 4 90-degree angles and four sides, but not all rectangles are squares because a square is the same on each side. So I thought that was a really good quote to kind of drive this home. What are metrics, right? Metrics are quantifiable data that's relevant to the performance of a company. A metric is revenue, that's profit margin, website clicks, Facebook likes. These are data points that are meaningful. So we're not taking away anything from metrics here. Metrics are super important to an organization. But I think oftentimes they get confused. Like people will call something a KPI when it's really a metric. And they may not know that there is actually a distinct difference between metrics and KPIs. So again, metrics, revenue, profit, website clicks, Facebook's likes, a number that's quantifiable. What's a KPI? A KPI, like the word says, it's a key metric related to a specific goal. So a couple of bullets here: year over year growth in a specific service line, right? That's a metric, right? It's growth, but you're comparing that metric to specific years or specific months, and you're breaking it down to a service line. Employee retention or turnover. You're not just saying 2 people left. You're looking at a metric would be 2 people left this year, right? KPI is that turnover. What's that goal? What's your average employee retention or your average employee turnover? Moving on here, a project or a service profitability. How profitable is a specific project or a service line or a team or a person, stuff like that. Utilization, billable versus non-billable time. A KPI there is, you want employees to maintain a billable percentage of 70% of their time, right? And you're constantly monitoring that and looking at it to see that baseline, right? Now, let's say this is perfect with timeliness of data, right? Let's say you've set a goal or you set a KPI, you want everyone to be 90% billable time. How often are you looking at that, right? How often are you looking at that to say this is realistic, this is not realistic? Moving on to other KPIs, revenue per employee or per salesperson or per partner, right? You're not just saying this is our gross revenue, you're saying this is our gross revenue per employee, this is our gross revenue per partner. It's a lot more meaningful and allows you to really, analyze your business in a more meaningful way. And then finally, project overruns. Why are we going over on specific projects? What's the reason for it? What are we missing here? What do we have to change? On the right side of the screen here, what's a good KPI? And I kind of mentioned some of it as I went through this list here, but there are 5 things that make a good KPI. And this is really, everyone should think about this when you're thinking about KPIs that affect your organization. They have to be properly defined, right? It can't be a fuzzy, hazy black box, and no one really knows what that KPI is for, what it does, right? It has to be achievable. Like I said, with the utilization piece, same way you have employee turnover, you can't say, we're targeting an employee turnover of, 1%. I mean, you can, right? But is that achievable? You don't want to set KPIs or goals too high that make them unachievable. Because going back to, passing the word across your organization and wanting your employees to perform, like Dominic was saying with timesheets, if something isn't achievable, no one's going to really shoot for the goal. It's not going to be really possible to meet that goal. Next, they have to be clearly communicated. Everyone has to be on the same page as to what we're trying to accomplish with this KPI, why we're doing it, how it affects the business. Everyone has to understand that from the top to the bottom. If you're going to be baselining your employees on a KPI or even on a metric, but primarily KPI, communicate it, let them know why it's important. Like Dominic was saying, timesheets, why are timesheets important to get in? They have to be accurately tracked and measured. And I'll include this in the next bullet, and regularly monitored. This is really the main challenge with KPIs and even metrics for most organizations. How are you going to track them, measure them, and monitor them? That's really difficult because as we said a couple slides ago, the reporting process typically takes time. So adding KPIs to your accounting department, your finance department, for them to track, and you want to say, we want to track this daily or weekly, that just adds kind of time and energy on a department that's most likely already pretty thin. So good KPIs, properly defined, achievable, clearly communicated, accurately tracked and measured, and regularly monitored.
Yeah, and one thing there, Chris, is it's going to be very specific to your organization.
Yes.
Every organization is going to have different KPIs. You're going to value different things. You're going to be looking to develop different types of services. Your KPIs may look different on a monthly or yearly basis. So KPIs are like a living, breathing thing. They're going to look different today than they do a year from now.
Yes, especially now, especially given the current state of the environment. All right, so on the note of monitoring and tracking KPIs and metrics, like I said, this is really a challenge that we're seeing out there for a lot of clients. The best way that we say that we kind of offer to monitor and track KPIs and metrics, and you'll see I'm bundling these two. If I'm going to use KPIs and metrics interchangeably now, because a lot of the stuff I'm going to talk about can track both. So if I just use the word KPI versus metric, don't think it's primarily for that. A lot of what I'm going to talk about is going to really be both here for the rest of the presentation. But we see the best way to monitor these are typically built with a business intelligence tool. What's a business intelligence tool? It's a tool that's, it's a software that's primarily visual, that allows you to leverage data to help make your quote unquote business intelligent. So what are these tools? A lot of people on this call have probably heard of some of these. Really the key players in this market are Power BI, which is a Microsoft tool, Looker, which recently, I think about a year ago, got acquired by Google, Tableau, which around the same time got acquired by Salesforce, Click, and then Tibco Spotfire. These are really the key players in this market. These are the ones you want to look at. These are business intelligence tools. What they do is allow you to aggregate multiple data sources. So from your accounting software, your subledger, maybe your time tracking software, it allows you to take all different sources, blend them into one, and report in one place. We've seen with clients how challenging it is, right? Having to run multiple reports from multiple systems, bring them all together in an Excel somehow, mesh them and provide management or your executive committee or whatnot with meaningful reports. So the power of these tools, you could see in this little graphic we have here, it lets you take multiple data sources. You could take an Excel, you could take a cloud data warehouse, you could take a POS software, you could take actually Facebook and Twitter if you want to monitor your likes on a real-time basis and you want to incorporate that into your financial reporting. So think about if you're really spending a lot of marketing dollars, right? What you would do now to analyze that marketing, you'd probably go in Facebook, you'd run a report, you go in Twitter, you'd run a report, you'd run your marketing spend report out of your accounting software, you'd kind of put it all together in Excel and you'd show management, here's our marketing spend, these are our new clients that we've added, right? This is our cost to obtain new customers, here's our likes. That's going to take time, right? So think about being able to link all those sources in one, load that data, set up custom visualizations or dashboards, and then just use them. And the beauty of these things, of these dashboards, generally speaking, they're always live data. So you're always, anytime you go into it, you're going to see live data, or you could have it refresh at a particular kind of threshold that you want. And that to us is, and to, especially the professional organization, should be the key part of this, the timeliness of that data. You're getting that data real time. You're seeing it happen in real time.
Right. Again, being able to make decisions in a more timely fashion, identifying opportunities, identifying issues, and shifting in order to react with that.
Mm-hmm. And like I said, dashboards are visual for the most part. They provide historical, current, and then in some cases, a lot of these softwares do have predictive results or predictive analytics built into it. That's pretty much that next level. We wouldn't kind of recommend that for clients at this point if you're just dabbling in the BI game, but they can get into predictive results. They look at past history and they kind of plot certain metrics or KPIs going forward to tell you what you could expect to occur. Why are dashboards, what's the benefit of these dashboards, right? What makes them different than Excel spreadsheets or standard reporting and stuff like that? We've boiled this down to five key benefits, right? Dashboards are great. You build them once and it's always up to date. That builds on what Dominic and I just mentioned. They're timely, right? You have timely information, and they're great because they're customizable. So typically speaking, dashboards and certain tools you're going to use to monitor KPIs and metrics, you don't just plug them in and they're done, right? And it's like Dominic said, every organization, whether you're a professional services organization or a manufacturing organization, whatever it is, everyone has different metrics and different KPIs. So there's no one size fits all. You don't plug it in, it flows data, and you're done. Great. Use the dashboards, use the reports, and you're on to the races, right? They're customizable. Second is, which to me is really powerful, you could access and aggregate data that you wouldn't otherwise have access to. What do we mean by that? We've seen cases where clients are using dashboards that are monitoring data by the hour, right? So they're able to see a specific day of the week and a specific hour metrics related to whether it's sales or labor, whatever it is, they could dig down to the hour. And the great thing about a dashboard is if that data is live, right? Let's say you were aiming to create a report right now. What are let's just talk about a retailer, because it's easy to kind of put our heads around. What are your average sales at 11 o'clock on a Wednesday, right? You want to try to think about when to put a sale out there. You could have someone run a report. They're going to spend a ton of time to run it. They're going to provide it to management. And as soon as they provide it to management, the next Wednesday at 11 o'clock that comes, if you don't update that report, it's stale. So being able to get to a granular level of data, assuming that your organization is recording certain data, so like that timesheet data, like you mentioned, Dominic, it's always going to be live, and you could get down to a very granular view that you most likely wouldn't be able to get to otherwise. The third piece, you can answer questions in real time. They're real-time dashboards for the most part. If you set it up that way, something happens, you could ask, why did that happen? And you could look at it real time. For the most part, when reports are ran the traditional way, a report is management runs, or the staff runs a report, provides it to management. You may sit in a meeting and there may be a stack of PDFs on the table. As you're going through and reviewing the report, management may say, well, why did this change? And for the most part, you may have to say, well, we don't really have that in the deck here. Let me get back to you on that, right? That's something that with dashboards, you could answer a lot of those questions in real time. If you could kind of foresee those questions coming, you could build them into a dashboard, and you have access to them. And key decision makers can actually dig down and see the data that affects some of these KPIs or metrics. The fourth piece here, they're visual, they're easy to understand. This to me is the best part of these things. And we included a couple of stats here, but colored visuals, allegedly, I don't remember the source of this, but increase people's desire to read content by 80%. Content with images increases a view rate by 94%. 94% of information is transmitted to the brain as visual, and the human eye could process 36,000 visual messages in an hour. So the thing about dashboards is they're visual, they're colorful, they're very easy to see trends, they're very easy to see what's good, what's bad, what project that has a lower margin. You could see it without having to look at the traditional Excel spreadsheet and kind of, maybe highlight certain items manually, which is a big benefit to these. Anyone, if they're set up correctly, anyone could look at a dashboard and see something that's good or see something that's bad. And finally, anywhere, anytime. Like I said, that note, typically if you have reports in an Excel or a PDF, chances are you're printing out a report in PDF is going to go into a drawer. You're never going to see it again, right? The thing about dashboards and certain business intelligence tools, you could access them anywhere, anytime. You access them from your phone, from your iPad, from your computer. You could pull them up on a TV screen in your office and monitor them in real time. But that's really the beauty of these. You could pull it up on a phone. So if you're CEO of a company or CFO of a company, you're on vacation, and you're constantly having to send emails back and forth. How are we doing today? What's going on? How profitable is this? What's that? Think about just being on a ski lift and pulling up your phone and just looking at a dashboard. And if they're set up the right way, it really should be a quick look. Using colors to kind of transmit messages in these things. Green is usually good, red is usually bad. And that's really the real benefit of dashboards as a whole.
Yeah, just the idea of making them visual. We understand a lot of the most successful business owners may not be number centric. Looking at numbers and understanding the numbers from a traditional accounting perspective may not resonate with people, but the visuals do. So it's, you can easily build visuals that resonate with you and hit home. And like Chris said, quickly identify activity, metrics, KPIs in order to make the business decisions timely.
Yep. Now, as we move on here, we're going to get into a couple of dashboard examples just because we talk about them. And a lot of times with this kind of stuff, you could talk about them all day, but until people actually can see what a dashboard looks like, it doesn't really resonate. So we have a couple of examples here. A lot of these dashboards we've built, some of them are demo dashboards, which we think are pretty good to give you a good idea of what they look like. But we're going to take you through this. Not all of them are professional services organizations. Some of them are, but the goal here is more so to give you an idea of what they look like, how they work, and just keep in mind, everything that you're seeing on the screen is customizable. And that's really the thing to drive home on dashboards and BI tools and these reporting. You could customize your metrics, customize your colors, customize your KPIs, customize what's important to you. So moving on, here's an example. This is really an executive overview profitability of a company that sells products. So it's not professional organization, it's retail. But when you look at this, right, it's very easy to see what your key metrics are. You have them along the top. You have your sales, your profit ratio, your profit per order, sales per customer, discounts, and quantity of sales. Like we were saying, when you use colors and visuals, you look at this map, and based on the color ratio here of dark red to dark blue, you could look at this in a split second and see where you're more profitable versus less profitable in a country, right? Think about this. If this was a chart that was plotting specific projects or specific employees, you could see, or salespeople, you could see what projects are profitable, what are not profitable. And the way that dashboards work, everything you could drill down. So if this were to be in a PDF, right, this is all you're going to get. You're going to see colors, you're going to see monthly sales by segments, by product category. When dashboards are live, one of the best things about them, you could drill down to information. So for example, you wanted to see what's going on in New York, you could click that, and your dashboard is going to be dynamically updated, and it's going to show you just statistics for New York, right? So just statistics for a region or a salesperson or a project. You could see your profit margin, your profit ratio by city within New York, right? You could see your sales. Everything on here filters to New York. You could see your sales by segment. You could see stuff like that. Really key pieces, colorful, visual. That's going to be a common theme throughout all these next couple of slides that we look at. Colorful, visual, and they're built to really drill down in information, answer those questions in real time, right? If you're looking at this and it's in an Excel spreadsheet, and someone says, why is Texas less profitable? From here, you can't get there, right? You're gonna have to say, we'll get back to you. You could click it and drill down to that information. So dashboards are great, drill down, colorful, visual, easy to understand. Anyone could look at that map and tell what's good, what's bad. On the same note, this is actually a dashboard from from the same report that we just looked at. But especially now, let's think about the holiday season shipping, right? Product shipping, blue shipped early, light gray shipped on time, dark brown shipped late. Very easy to see in one view when you're shipping when shipping is delayed more often than it's shipped early, right? So we could see there's a spike the week of August 20th here. August 20th to September 24th. Why are we shipped late so much more often? Like I said on this prior slide, if this is a traditional report, that's all you're going to get here. Unless you've already pre-built some of this stuff in the background in an Excel or whatever it is. If someone says to you, okay, can you break out the 44% or the 28% shipped late? If you don't have it built or you're not prepared for it, let's say they ask for only July 9th. How are you going to get that, right? In real time, the way dashboards work, you want to see what's shipped late, you're going to click that, and you're going to get the visual is going to update, and you're going to see only orders that shipped late. You're going to see what products they were. So you could see where there's trends in certain products. You could see the timeline of them. You could see all the information you need to answer your own questions. Again, visual, colorful, drill down, and anyone could look at it and see something good or bad.
Right, and to correlate this to professional services, maybe instead of thinking about shipping, deliverable.
Mm-hmm.
What is our deliverable with our clients? When do we say we're going to get it to them? Maybe you're not tracking that, but that may be something that you want to track. What are our internal due dates with our clients on the deliverables? How many of those due dates are we meeting? How many are early? How many are late? All of that stuff can be metriced and turned into a KPI. The goal here is to increase customer satisfaction.
Yep. Great point, Dominic. We have another executive level dashboard. This actually is a professional services company. So at the executive level, right, let's say this is a law firm. What are your annual billings? What are your billings per employee? What are your billings per partner? What are your collections? What have you written off? How profitable are you? What's your employee utilization? And you could very easily see trends, your year-to-date collections over a period of time. Your billings by service. So what type of services are you providing as a law firm? It's a very easy way. You could click a specific year up here. This is not live, this is a screenshot, but in the live dashboard, you could look at a specific year and it'll update the entire dashboard. Similarly, billings by industry, right? What industries are we serving as a law firm? And you could see trends over time, how that industry markup makeup changed, right? So you could see, I don't know what categories these are offhand, but what this green came down 2% over 2 years. You click it, you could see why. You could see what clients you're serving in that space. You could kind of drill down and to try to find trends in why your billings have decreased, right? A little example here, let's say you just wanted to see 2019, you click it and you go from an annual year-to-date view to only seeing your monthly year-to-date collections, right? So you could see trends in your collections, you could compare them over specific periods of time. And something to keep in mind, everything on here is customizable, right? So if you want to look at every March over the past 10 years, if you want to look at every December over the past 10 years and see how your billings versus your collections are, you could do that as long as the data is available. Continuing on, here's another dashboard of a map, right? On this dashboard, we have 6 salespeople, which are different colors. You could very easily, very quickly see where those salespeople are selling or where projects are going on throughout the country, or this could be your clients, right? Where your clients reside across the country. Very easy to see what your billings are. And in this actual dashboard, this is an actual dashboard, we could drill down to a specific zip code. Another one here, this is an actual dashboard that we've actually built for a client, but the key to look at here is on the right-hand side. These are your comparative KPIs and metrics. This is where these come into play. You come up with your KPIs, you come up with your metrics that are specific to your organization. Once you determine what those are, if you're linking to live data, you always have live metrics. You could see these on a weekly basis. So you could filter this to a specific week. I think this dashboard, when I took the screenshot, it was the month of November, but you could drill down and see month of November, what are your KPIs for 19 and KPIs for 20? You don't have to know anything about this business. You don't have to know anything about it or what numbers mean anything. You could just tell, if I ask you, global RPC, what year was it better? It's without knowing what's what, you could tell 2020 was better because it's green. So when you set these up, point to drive home, visual, drill down, making them visual and using colors lets people kind of really see what what's good, what's bad, what you have to improve.
Right. Question here, Chris, on what
Sure.
platform we're using. These are a mix between Power BI and Tableau.
Yep, Power BI, Tableau, and then we're gonna towards the end we have some of our a Janover BI platform that we've been using as well. And I could call it out if it helps. This is actually a Tableau visualization. The last couple that we saw, they were half Tableau, half Power BI. Moving on, this is what I had explained earlier. This is that information, whether it's sales or whether it's hours or whether it's marketing, whatever it is, this is that information. In this case, it's sales, but it shows average number of sales per hour for every day of the week over the past, I think this is 4 years of data, right? So you could very clearly see trends in the data here. You could see what days on specific times are better or worse than others. And you could drill down in this report to see why, right? To see what happened on specific days. You could see it by hour and day, or you could just see it by day. So you could see obviously Friday, Saturday, Sunday are more busy. If you're looking, in this case, it's retail, it's not a PSO, but if you want to look at when to put discounts forth or certain things like that, really important. And it's great because it's always updating. Moving on, hopefully everyone can see this. These are a couple of more examples. These are within our Janover platform, but in this case, this is these are more for the organization's finance and accounting. So here's your live balance sheet, right? This is linked to live data. You have a live balance sheet, AR and AP, trending basis, bank account versus current liabilities, and working capital trends. So all this information, whether you have one entity or multiple entities, you could aggregate all of them into a dashboard and see a consolidated combined balance sheet in real time. You can see trends in your working capital, right? Dashboards are great for metrics and KPIs, but they're really great for trends and digging down to see why a trend is going a certain direction and why things are happening the way they're happening. This is balance sheet. On the same note, you could have a P&L dashboard. So you could have year-to-date results, year-to-date versus last year, income, gross profit, net profit, trends in your net profit, trends in income, cost of goods sold, gross profit. There's so much you could do. And this dashboard and the one you just saw are purely linking to QuickBooks data. So these are multiple QuickBooks entities aggregated into one dashboard and reporting as one. If anyone out there, I'm sure most people out there are using QuickBooks, or some people out there using QuickBooks. Everyone knows how much of a challenge it is when you have multiple QuickBooks files, right? To report on a single entity, if you have 3 QuickBooks files, is really difficult. It's really hard to get timely information. And with a dashboard, you could plug in each entity and you can see everything real time, which is great. We've shown you dashboards. There are also, you could create monthly KPI or metric reports, right? These are your more traditional PDF reports, but on the same note, as we've been discussing, colorful, big numbers, drill down, KPIs, metrics, this accomplishes it, right? It gives the viewer, rather than a traditional financial statement, right? It gives you a less traditional financial statement, but gives you the key numbers that your business should focus on, right? Your net profit, where does it compare this month versus last month? Your profit margin, your net profit margin, your gross profit, your total cost of goods sold, and trends. Really simple to understand trends. How did you do last month versus this month? And then these break out to a certain level of detail. So they're visual, colorful, they give you key information you need. That's a P&L statement. You could also get more balance sheet statement and a financial performance. Where are our trends in AR and AP, right? We could see that mapped out for trailing 12 months. Your receivables balance as of a date, your payables balance as of a date, your cash management, liquidity ratios, your current ratio, your working capital ratios. So like Dominic said, depending on who you are and how you like to look at information, these reports can be tailored to you. You may have a company where half of management loves really big picture, high level KPIs, other half wants to detail the minutia. You could get both of them through these reports. And that's really the piece to drive home here. You can get that granular traditional report level, right? Just see balance sheet, P&L, cash flow, and some disclosures, or you get this more high level. Here are the key pieces. Here are the key things you need to worry about. What are return on assets? Here's a description. What's return on equity? Here's a description. Anything you want to add in there, Dominic?
No, again, just I know we're saying it a lot, but customizable. What are the important KPIs for you? That's what we want to build into a dashboard.
Yeah, definitely. So finally, that's going to just about wrap up our presentation. Really key piece to the drive home, like Dominic said, everything is customizable, colorful, visual. Once you determine what KPIs are important to your organization, how do you monitor them? We think the best way to monitor them is through dashboards. You may have your own way to do it. Everyone kind of has their own way. And just to wrap this up, we're just going to throw out a third polling question there. Everything you've heard in this hour, and I know we've crunched a lot in here. What are you most excited to about exploring, whether it's through us or whether it's through yourself? What are you going to take home and maybe go talk to the CFO of your company and say, listen, we got to have this. We got to think about this. This is something we're not thinking about. We should do it. What most excites you? And we are at about 10 o'clock. So as this poll continues to go, you want to just wrap us up, Dominic?
Sure. So again, it all starts with quantifying your costs, budgeting your costs, quantifying your labor, being able to turn that labor into revenue, and how do we monitor the spend on labor, on what the revenue is being derived. Once you're able to track all of those key costs, you're able to create KPIs based upon the metrics that you have out there. You have data everywhere. You have data places that you don't even know that you have data. All of this data can be harnessed together and used to create these KPIs. And Chris, it looks like people are really interested in the KPI dashboards and the metrics. Not surprising. But if the first small step to take is just to get that budgeting tool built within your organization,
Mhm.
identify the KPIs that are important to you, try to figure out the best way to capitalize and harness that data, and then turn that into KPI metric reporting. Step number one is budgeting. We can't stress that enough. So we thank you for joining us today. It's been fun. I know we covered a lot. We have our contact information here on the last slide. Like we said, we're going to be sharing the PDF of the PowerPoint with you. Please feel free to reach out if you have any questions, you want to bounce things off of us. If we can be any help with you, we're really passionate about this, and we hope that you can bring some of these concepts home to your organizations.
Thank you, everyone.
All right, have a good day.